So, again, sorry to deviate so much. I was scrolling on Twitter, now X, and I came across a couple people in the financial sector that I really like. And one of the new follows that I followed was this Nick, I think Gerli is his name, or Gerli, Gerli, I think.
Gerli.
Yeah. So he posted this housing bubble chart. And
you're going to make fun of Dickler. You're not going to make fun of Gerli?
Nick Gerli? No. He's got good data.
Okay.
Dickler's article was questionable.
What?
She used a clickbait title, bro.
Bro, people need to know how
it impacts your money. Get the fuck out of here.
Just the fact that it does impact your money.
It doesn't impact anybody's money.
Come on, what?
Yeah, Dickler's giving you the dirt Dickler.
The Fed funds rate doesn't impact people's money? Hot take, bro.
When they don't change it, nothing's changed.
If they're still holding.
Okay, give me $5.
What?
Give me $5.
Yeah, no, you're going to hold it.
I'm going to hold it.
Yeah, I'm losing money on inflation.
No, I'm holding it.
Yeah, inflation. My money,
my
$5 is going to be worth less by the time you give it back to me.
You are a coffee saver. You just said coffee is $5 ain't no big thing for you, man.
Nah. That's not what I said.
Nah.
Yeah. Come on, man. Don't do this.
So what Haroon has pulled up is Reventure, which I believe is Gerli's consulting firm. And it shows a chart, which is a big title on top. It says, biggest housing bubble ever. It really shows inflation-adjusted home prices from 1890, is that what it is, to 2023.
Yes.
From the Case-Shiller index, right?
Mm-hmm.
And inflation-adjusted home prices in 2023 are 85% overvalued compared to their 130-year average, according to the Case-Shiller Home Price Index.
That's insane, man.
That is insane. And when you look at it in the visual graphic that has been displayed here, it is way, way, way higher than it has ever been historically. I mean, way higher. And if you look at the only other time there was a peak even remotely close to this, well, guess what, kids? It was the Great Recession. So the suggestion is the Great Recession was a massive housing bubble. And when it popped, the market was changed. The landscape pivoted in a way that took several years to recover from. Mm-hmm. Well, this chart seems to suggest that we are on the beginning of a downward portion of a correction.
Yeah.
Because values could not be sustained at the previous numbers, and here we are again diving back down. Even if they were to go halfway down, still above the 130-year average, right? Well above it, the, quote, normal average, if you will.
Right.
And still higher than any other period in time except for the Great Recession, you would still be halfway down. You would still be significantly more affordable than you are today.
Yep.
So, again, I will reiterate, and Haroon, go back to the tweet, if you will, or they don't call them tweets anymore, whatever the hell they call them. It's X, not Twitter.
Yeah.
Home prices adjusted for inflation are 85% above or overvalued compared to their 130-year average. The only other time overvaluation came close was in 2006, and we know what happened in 2007. It was the Great Recession. And we all know, of course, what happened after that and the impacts to the housing market. But what I will say is really, really, really interesting is there seems to be almost a denial of who this impacts the most. So I'm going to make what may sound like a very arrogant, class-driven comment, but it's supposed to be illustrative. Okay?
Okay.
So a grain of salt. The lower class is not going to have a tremendous change in their lifestyle if we enter into a recession. Right?
I don't know, man.
They're not going to have, well, if you're a W-2 minimum wage earner, other than having to look for a job if you lose your job and having to go through unemployment in that situation, you're probably going to get you a job that pays in and around the same amount of money.
Mm-hmm.
Okay? With no disrespect intended to them. The wealthy are going to survive a recessionary economy either way. The class that gets smashed down and compressed is the middle class. Because the middle class can't afford to buy homes, something the lower class wasn't going to be able to do anyway.
Right.
Generally speaking. The middle class can't buy the one vehicle which typically provides them the most of the biggest source of their wealth. So what's going to happen? The middle class is going to get smashed together. If, in fact, we don't have a correction in the housing market.
Right.
So this is not a hypothetical. That is actually factually what will happen. There is no avoiding it. When less people can buy homes, this is just a natural and logical consequence. And for my entire childhood, through presidents that were Democrat and Republican alike. The fear has always been the shrinking middle class, and they're only being rich and poor. Because when you have rich and poor, you really have a subservient subculture that works for the other part of the subculture, right?
Right.
The other part of the culture, if you will. And I can tell you that the ramifications of this not happening scare me far more than anything in the near term does.
Well, yeah, this definitely needs to happen because we know real wage growth is negative, meaning the prices of things are still going up at a pace that is more than our wages growing. So now there had been a month or two where the wage growth surpassed inflation, right? But as that continues to be negative, right? The San Francisco Fed has already come out and said that the pandemic excess savings that people had will be ran out by October.
Yep.
Same time frame as student loan repayments coming back online.
Mm-hmm.
Okay. That's on average a student loan repayment of $300 a month that's getting pulled away from the retail space, consumption space, right? What does that mean? Ultimately, businesses become less profitable. I have stats here. New credit card delinquencies a year ago, 4.8%. Now, 7.2%, right? New auto loan delinquencies last year, 5.6%. Now, 7.3%. Delinquencies are on the rise, right? What does this ultimately mean? Business will be less profitable. They're going to have to pull back. More layoffs are ultimately going to come. That's around the corner. So I do feel like it's going to impact the lower class a lot too.